Let me read you something real quick that Jeffrey Gundlach just sent to me via email, okay? And I'd like all of your opinions on it, Jim, you especially. It says, if the stock market reversal is due exclusively to the virus, then why is United Healthcare down far more than the S&P? Why is healthcare as a sector broadly not outperforming? Answer to those questions, the market is digesting a better than 50% chance of Bernie Sanders getting the nomination.
At times I've disagreed with Jeff. This is not one of them. When I see everyone at the in a debate last night trying to attack a guy, what it tells me is that guy's the front runner. I agree with there's a path. Jeff's right. I agree that there is a path. We get, let's say, a dramatic decline in employment because the virus is much more virile and malicious than we think. And Bernie wins. United Health, it's not like it goes lower. It doesn't exist. And so it's really hard to buy a $250, $260 stock that may go to zero because that's what Bernie wants. Now, I don't know if anyone heard Lee Cooperman today. Bernie can't win if he calls himself a communist, but he has many communist tendencies. And one of them is expropriation. And the rich people are kulaks, Kulak. Google those guys. And so I think that Gundlach is right, that the big worry right now is...
Isn't Florida a rather important state to win to get to be the next president? And it seems to me these comments on Castro...
I thought that was important.
I think he just lost Florida, is my opinion.
So he also goes on to say it seems highly unlikely Bernie could win the general, so what's the big deal question? Well, the answer, maybe this is the dark side of momentum investing. The market goes down in a knee-jerk way on the Bernie rise, but the market going down makes Bernie's polls go up on his rejection of a market-based economy, which makes the market go down another leg, rinse and repeat.
But the correlation really has been with the virus rather than Bernie Sanders, in my opinion.
But that's part of his point. He's suggesting that maybe we should pay a little more attention to Sanders' rise, and thus that is an overhang on the market in ways that the virus may not be.
I don't think that nobody I talk to believes that it's only the virus took the market down.
Right.
When Sanders came out of the first debate so strong, and as his polls moved up, you've seen the market trade down with that. It's impossible to disaggregate the forces taking the market down. You can't do it. Now, of course, it's a tell when you have the health insurers come down and some of the other healthcare companies. But here's how I'm looking at it. So I had been taking my exposure down. I'm saying repeatedly on the show, I'm shaving positions. Yesterday, I put some money back into the market towards the close, so about last half hour in a day, on stocks that I own. And they're trading positions over and above my core positions. They were BABA, they were Boeing, there were a couple others. I put a little United Rentals on because I had sold that stock at about 150. Came down on earnings to 135, traded back up to 160, which was ludicrous. So I bought a little of that. Not enough to matter either way, but I just wanted to be there. I took all those positions off with the exception of about 20% this morning because I'm not so sure this market holds. Right. The reason why I was comfortable buying them is because, and holding them through the morning, at least most of the morning, is because Asia's closed now. They're all sleeping. So I'm not going to hear any updates about the geometric progression of the virus in Korea. I can tell you I've spoken to over 20 companies in the last few weeks. This week alone, already, it's Wednesday, I've spoken to 5 companies. And while you hear that 50% is back to work, 60% is back to work, tell me about it. They said, well, it's really 50% of our white-collar sales force, our white-collar people are back to work, working from home. In terms of the production lines, supply chains, it's about 30%. So you got a long way to go.
So what do we do if you come out of Super Tuesday, okay, and Sanders has an even tighter grip on the nomination, and the virus stories start to percolate even more? What does that mean for the stock market? And vice versa, look, what if the virus headlines start to dissipate, but Sanders continues to strengthen his grip? Well, Isn't that still a negative on the stock market? People are going to say that.
I think that if there's a chance that the economy gets a little soft, I think we're going to be incredible. Sanders is going to dominate the headlines. And when we look at what Sanders wants to do, it's anti-stock market. It's not neutral. He doesn't like the stock market because it's
black and
where
white.
The rich people are.
By the way, you see what the market's doing? So we're at session
interest
lows.
rates.
Let's throw up. Can you throw me an intraday, guys? It's not just a stock story. It is a bond story. in many ways as well. Throw me an intraday, if you could, in the back of the 10-year, 30-year, things like that, to which Gundlach, by the way, also opines on what. There you go, right? That's the story. We talked about that. Yields
so
go
you don't
down,
need us.
stocks go down.
Should we just take a?
But this goes to the overall point. Until you see, Jenny, stabilization in the bond market, how can you confidently think that it's okay, as I asked at the very top, to start buying stocks?
Because I think you can look at the stocks on the individual basis. So I thought it was so interesting what Jim said, that he called his wife and he said, get on Amazon stockpile. So what did I do? I added to one of the companies in my portfolio called Westrock, right? And this is a stock that's a core holding, but some of our clients are newer, some have added cash, they may not have a full position. So I think to myself, what's going on with this? They make cardboard and paper cups like these, right? This is not actually affected. Meanwhile, I bought it last June when the trade war had disrupted it. So when I hear Jim say stockpile, stockpile, all I can think of is more and more cardboard being used.
At 5% yield? 5% yield, that's safe?
5.2% yield,
safe?
10 times earnings, should actually benefit in this environment. So I think you can go in confidently if you know the company that you're actually buying, if you're being really strategic and really focused on what you own.
Look, there are a lot, Pete.
But I could pick through that.
There are a lot of stocks that are part of our correction collection, if you want to call them that, okay? 60% of the S&P is in correction. 24%, by the way, is in bear market. Transport's getting smoked. You look at some of the tech stocks. Apple's down 10. AMD's double digits. I'm just going to read the double digits without giving you the numbers. Applied Materials, Broadcom, Facebook, IBM, Intel, Microsoft, MasterCard, Micron, NVIDIA, Oracle, PayPal, Qualcomm, Texas Instruments, Visa, right? You sort of get my idea. Other brand names: Amgen, Bank of America, Caterpillar, Chevron, Disney, Dow, eBay, GE, Goldman, Harley, JPM. I could go on and on and on. Not yet time?
I don't think so. And the reason I say that is I think that what we're seeing in the market right now is a market that is reacting to the point of everybody else. But I think it's probably 70% of it is the coronavirus. The other 30% I would put on the Bernie Sanders and how he's looking so far as the front runner. So I think that the combination of what we're seeing right now, I still think we've got downside in front of us. And the reason that I think so is I continue to look at this market, and we aren't really focused enough on what's going to happen here if it is the U.S. And we start to see some of that. And even though I think you're right, it's more like a flu, and it's certain parts of the demographics of society, but it will put a fear factor into people. And when they have fear, they sell. And what do they sell? They sell the most exciting names that had the biggest run-ups to the upside. Look at something like Microsoft. We brought this up yesterday. Absolutely screaming to the upside after its earnings call, 160 to 190, and it's almost reversed back. I think it would probably be a buy if you get back to those levels where that stock was before the earnings, because it's still Microsoft. It's going to be a great stock, but I think it's probably closer to 160. I look at Micron, I think somewhere closer to 50. I think there are names out there that are getting sold off when you look at the fundamental story, the C-suite itself, and the growth factors when we don't have the virus right in front of us. Those are the names that I'm looking for. But I think it's too early still right now, just because I think, and today's a great example of that. What kind of movement from high to low and in between have we seen since before the market opened, Jimmy?
Rates. Right. Rates are telling you that it's going to slow down again. That's the real reason. Remember, we're not doctors. We're not Fauci. We care about rates. I would point out, I go to Milan quite a bit. And there's a beautiful airport, Malpensa. You live in that airport. It's so gorgeous. It's like that movie. And it is so easy to board a flight. You can go, it's gorgeous. You go United Arab Emirates if you do want to go. It's an A350. It's fantastic. And you're here. Voila, you're at JFK Airport. Well, holy cow, are we really letting that happen?
That's why I thought the Italy...